Let's now go to standing by upstate in New York in Rhinebeck, Gerald Celente. Nice to have you this day, Gerald.
Well, thanks for having me, Gary.
Gerald, I've already given your introduction earlier. We want to talk about the latest trends. And several months ago when you were last on this program, we discussed the strength of the dollar. Back then, there was a strong indication that the dollar was eroding, and this was speeding up efforts by other nations to trade off the dollar. We also discussed the rigging of the markets to compensate for its precarious fragility that could lead to a collapse greater than 2007 and 8. However, we're being told that the dollar right now has not been stronger for a long time. Also, a year ago, foreign exchange strategists were predicting that this year would be the year of the dollar and were predicting the fall of the euro. This was the view of the Bank of America, Morgan Stanley, even though for most of 2014 the euro held its own. Now we're witnessing Germany, the strongest economic power in Europe, entering a triple-dip recession, and other European nations are equally plunging. So my question is, how much of this so-called strong dollar right now is fully dependent upon the larger world economy right now, particularly in Europe, and what are the weaknesses you observe behind our so-called strong dollar at the moment?
The weaknesses of the strong dollar at the moment are record low interest rates. Interest rates have not been risen in the United States since 2006. That's the only reason why we had this fake recovery at all, because money's cheap to borrow, and the private equity groups, the hedge funds, and the vulture capitalists have been buying up and buying out everything in sight. And they could do it because the banks have been getting their money for virtually nothing and loaning it to the big guys for just a little bit more. So you effectively have zero interest rates. As we kept saying over and over again, we were never in the camp that the dollar was going to decline, considering what was going on around the world, that they're all fiat currencies that have been propped up through the stimulus and low interest rate manipulation. So compared to the other currencies, yes, the dollar looks strong compared to the ruble, compared to the Chinese yuan, compared to the euro. Because when you look behind the scenes and what's going on actually in front of the scenes, you have in Europe now, you cannot make this up, negative interest rates. You mentioned Germany, the engine of Europe, now going into a decline. As we speak, we're looking at the Greek stock market today down over 7%. You're looking at the German market down 2.9%. The English down 2.8%. The CAC, the French market, down 3.6%. We're looking at the U.S. market as we're speaking, down 352. Then you're looking at and putting the whole story together, you have to go back. Why would I want to go into the Chinese currency? There's an estimated 70 million luxury apartments that they can't fill. You look at real estate growth last year in China.
Maybe I misheard you. How many did you say?
70 million.
Wow, 70 million apartments.
Yeah,
luxury apartments?
Well, again, it's a population of 1.2 billion,
right,
but still a lot. So then you look at the real estate growth last year in China, it was essentially 27%. Now it's down already in the first 2 quarters, down over 10%. And those are official government numbers, so you know that they're skewed as well. Then you have to keep putting it all together. You look of course they're madmen, the people that declare war and other stupid things, the sanctions against the Russians. Perfect. Bring sanctions against the Russians as the European market's in decline, and that's a big marketplace for Germany. And now you're looking at German exports going to Russia down over 13% at a time when their economy's going down. And then what you really have to do, and we've been doing this since June, Brent crude peaked at $115 a barrel in June. Now Brent crude is down $80 to $85. And it's not because of more supply, because of fracking, et cetera. Yeah, that's part of it. But the big part is when I talked about China, you talk about Europe, you talk about the United States, you talk about Indonesia, Brazil, you talk about Australia, demand is way down. So now you're looking at crashing commodity prices because of low demand. So all the currencies are weak. And by the way, gold is up $10 at $12.44. And as you well know, I've been bullish on gold for a long time, saying that the downside of gold could be maybe $150 down from where it is now. But the upside potential is enormous. And here's where the upside potential starts coming in. As I said, the only reason why we had any recovery are the record low interest rates and the massive amounts of money being pumped into the market. Now they've stopped. This month is supposed to be the last month of quantitative easing. I believe that the United States, China, and Europe are going to come up with new money-pumping schemes. They're going to devalue the currencies even more, and that's when you're going to see gold prices really take off.
What do you believe gold could go to?
Gold could go way over 2,000. Remember, it almost hit it back in 2011. And people don't know this because they weren't involved in it, and I was. You remember the MF Global scandal.
Yes. When
John Corzine, the former head of the Goldman Sachs gang, and then, of course, a senator and governor of New Jersey, and then a head of MF Global, crashed the gold market. Basically, they declared bankruptcy. It was perfect on Halloween in 2007. And I know because I got burned, because I was doing trading with MF Global, which was two other companies before that. So that's when gold prices started to go down. And when you look, is there a gold manipulation? We know for a fact that the Forex markets, those are the currency markets, Gary, that are traded at 5.3 trillion dollars a day. We know for a fact, this isn't conspiracy, that they're rigged. You know that the LIBOR rate, what the interest rate is. We know for a fact that documents and people responsible for it, some of them, they're there. It's rigged. I believe they're rigging the gold market because people will bail out of their cheap currencies and go into gold and make a very bad situation worse. And I really believe that people should really tune into the markets now, watch what's going on. October is that month. It happened in the crash of 29. It happened in the crash of 87. And we're looking now at the markets really declining rapidly. And remember also that the Federal Reserve, which is not federal at all, it's a private group of people, banks, they have a trading desk on the floor. And they have access to as much money as they want because they just print it. So they're behind the manipulation, I believe, as well.
Do you see any time in the next 24 months that America go into such a sell-off of the assets that we're now seeing in Wall Street? If this continues today, and if it goes down 300 to 400 points today, which is possible, but it could reverse itself, that would be almost 1,000 points down in the last 2 weeks. Do you see this could be the beginning of a major correction where that 17,000 high, and people said it was going to go to 20,000, 25,000, it could go down to 10,000 or less?
Yes, because it goes down back to global demand. It's a very simple formula. If Americans and the Europeans don't buy, the Chinese don't produce, nor do the Indonesians, the Vietnamese, etc., the cheap labor companies. If they're not producing, then the resource-rich countries like Brazil, Australia, Chile, Bolivia, they're not exporting, and as well as the oil-producing countries, it's all the same. So that's when you're seeing the big decline happen. This is simply a supply and demand issue. Period, paragraph. And the demand is way down. Look at retail sales came out today. They're soft again. And what was boosting them up was the record high auto sales. And we had written about this a couple of years ago that they were boosting up the auto market. It was the new subprime market. You don't have any credit rating, you don't have a job, don't worry about it. You could buy a house. That didn't work anymore. Now you could buy a car.
With no interest, no payments for 24 months.
Exactly. So now that's unfolding. I'm saying right now, I really believe that this could be the beginning of the crash of 2014. I've been on record saying, a matter of fact, I was on one of the shows, Coast to Coast, on October 1st, and I said exactly that watch out, the bubble is ready to burst. It looks like it's happening. Again, this is a supply and demand issue.
Gerald, don't we have bubbles in the commercial real estate market, grossly overpriced? Landlords exploiting, getting 200% and 300% over what they got 10 years ago.
Again, it's grossly overpriced because of the record low interest rates that allows the speculators to keep this Ponzi scheme going.
And don't we have a bubble in the bond market?
Exactly. When the interest rates, I believe, are going to have to go up at some time to protect the failing currencies. When that goes up, the Ponzi scheme is over. I was listening to the people on just before me. What's caused this big multinational takeover, and it's been in the making, actually it happened in really under Jimmy Carter when he started deregulating the usury laws that allow now the banks to charge us anything that we want. And then Reagan and Bush couldn't get away with it because they were Republicans, and then Clinton pushed it through. But it's the deregulation of the Sherman Antitrust Act, the Clayton Antitrust Act, the Robertson-Patman Act. All of these laws were put in place so we, the people, would have a fair shot at the land of opportunity. And they've robbed us from us. And people don't want to call it what it is. And they'll say things like, well, Obama is better than Romney. They'll say stupid things like that.
It's fascism, Gerald.
It's fascism. That's what I said with the merger of state and corporate powers. The words that spell it out that nobody can deny, too big to fail. When they bailed out the banks, they made it clear they were better than the rest of us. We're too small to save. In capitalism, there is no too big to fail. It's fascism. You called it.
Finally, Gerald, and we only have about 30 seconds, recent surveys showing that the level of trust in America towards government, industry, media, religion, medical establishment is at its ever lowest point. Do you see this turning around? Do you see it only getting worse?
It could turn around because the vacuum is so large it could be filled with anything. This is the time for something new. You look at the Black Plague. I mean, how much of Europe was destroyed? Something like, whatever numbers you look at, as high as 60%. And a renaissance followed it. So I believe we're Renaissance ready.
Good.
And this could be the time for it because the vacuum is so big now it could be filled with anything. It could be filled with more hate, immorality, or it can fill with respect, dignity, morality, and,
Gerald,
and passion.
Whatever it is, you're going to be there for it. I look forward in 3 months to having you back. Gerald Celente, the publisher of the TrendsJournal, and it's published 4 times a year. Go to TrendsResearch.com. Gerald, as always, thank you for being on.
Oh, thank you.
I'm Gary Null. We're out of time.